What's up, guys? Today's video is going to be on break of structure, which is pretty common in any strategy you see. This is very important to know, so I want to make a quick video on this. It's going to be pretty short and simple because it's a pretty simple concept. But first you got to know what is a BOS, which is short for break of structure. Pretty simple concept. But first you have to know what is a high, right? And what is a low in the market. Right? What is a high? What is a low? So, as you know, this is a high. Where's a low? Here's a low. Here's a high. Here's a low. Low, high, low, high. Pretty simple, straightforward. This is a high. This is a low. This is also a high in the market. Now, quickly identify this on a chart. Where's the highs? Where's the lows? Here's a high. Here's a high, here's a low, here's also another low. Okay, pretty straightforward, right? Everyone can see this. Very straightforward. High, low, low, high. Very simple. So back to this. Why is this important? What am I trying to make a point here? What is a break of structure? So we went over this in the liquidity video, right? When you have something like this, right? This is resting liquidity, right? We can consider this buy side liquidity. So what happens? What happens to price? It move around. We take out, this is a liquidity sweep, right? We took out buy side, we swept, and then we continue down, right? Something like that. This is a pretty simple model, right? We swept this high. This is considered a liquidity sweep. We swept buy side, and now we sell off. That is a liquidity sweep. Now, here's where it gets a little bit confusing. What is the difference between a liquidity sweep and a break of structure? A break of structure is this. We put in a high, right? And we displace above that high and get a candle close, right? So this is the difference. Liquidity sweep is we sweep this, and then instead of getting a candle close above this high that we displaced through, we continue down, right? That is the difference. This is our break of structure because we closed above this, okay? We displaced above a high. Now, it's the same thing for a low. When you see a low in the market, right? We put in a high, we put in a here. Here. We have a low right here, right? Let me just make it easier for you guys to see. Here's a low. Right? This is a low. Now if we want to sweep this, we sweep it and we continue back higher, right? We never close below it, we never close above it. However, a break of structure means that we displace through the low and a candle fully closes below that low. And we continue to sell off. Break of structure is when we displace below a high or a low with a candle close. If the candle does not close, a wick, it could wick below it. But you guys already know what that's called. That's a liquidity sweep. It doesn't matter if it wicks. It has to close above or below. A candle close. Very simple, right? I mean, this is very simple stuff. You have a high right here. You have a low right here. What does price do? It closes below that low. In this case, it closes above that low or that high, which creates a break of structure. And what does that break of structure mean? It means the market is now telling you the bias has flipped. In this model, we were bullish, right? We're heading up, created a new high. And then we sold off and closed below this low, meaning we are no longer bullish. We are no longer in a bullish market. We are now breaking structure on any time frame. This works, any time frame, by the way. And I'll go over that in a second. But we broke structure to the downside. We candle closed below this low that was put in. And now we are continuing down. That is a very key part. That is another step in the strategy. And like I said, after these videos, I want to make all of them like section by section. And then I'll be putting them all together, step by step, all my confluences together to show you my exact strategy, which many of you guys already know it. So this is very simple. Breaker structure, sell side, all this stuff. Very important. Okay. So now we're going to go in the chart and show you what it looks like. We'll just show you examples from today. Okay. Very simple stuff. Let's go down to the 3 minute because it's pretty important. So, market opened Monday 6:30. Let's go ahead and draw in our market open. Okay, market opened here, and market closed right around here. Yeah, there we go. Okay, so here is the market. This is open, this is closed. What do you see? We see highs, we see lows, right? Many highs, many lows. What are we looking for? Let's go to the 3 minute. Perfect. What are we looking for? And this is why I'm saying breaker structure is not always breaker structure. You have to look at the overall time frame. What has just happened? Okay. Most of the time, you pair these two together. You pair a liquidity sweep. Let me write this out. You pair it with liquidity sweep, and then your breaker structure. Okay. Once you see a liquidity sweep, you want to wait for a breaker structure. That is why not every time the market closes above a high or closes below a low means that the market is ready to go that way. As you can see right here, right? We closed above this high, so we should continue up, right? No. Why not? Because we haven't swept any sell side. You know, the market can't head higher here because we didn't sweep any sell side. Look, all of this is untouched until, look, sell side, untouched, sell side, untouched. What happens the moment we sweep an internal sell side, right? We get a liquidity sweep here. What happens? We get an internal manipulation move. We sweep out the sell side. No breaker structure, by the way. A breaker structure would be this 3 minute candle closes down here. We get a close down here. Do we get that? No. We sweep this. This is not a liquidity. This is not a breaker structure. This is a liquidity sweep. So why does this not work? Why is this not a breaker structure? I mean, because it is. It is a breaker structure. But why is it not validated? Why is it not a valid breaker structure? Because we did not previously sweep any form of sell side. Is there any low here that gets swept? Here's a low. Here's a low. Any prominent low gets swept? No. We didn't sweep out a single prominent low. Which means any break we see to the upside here is not valid. It's not a validated breaker structure. Okay, so that is why this right here, because here's a high, right? We displaced the high. We close above it multiple times. Why is this not a valid breaker structure? We have not swept any form of sell side, which means the run on liquidity cannot go higher yet until we get a manipulation move. And what do? It's a little bit off topic, but it's right in front of my eyes. I can't ignore it. We sweep liquidity here, right? Sweep liquidity. What do we get? Now this is when you go to your small time frames and look for that breaker structure. Okay. What are we looking for? We're looking for a high to get displaced through. Okay. Not really much going on here, to be honest. I would consider this your high. I would say once price breaks above here, I want to see the breaker structure. When do we get it? All these are wicks. Wicks, 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 wicks. Boom. These candles right here. This one is our breaker structure. Okay? That are our displacement. Now you have your breaker structure and it's valid because we already swept out a form of sell side. Very beautiful entry here. Very, very, very good entry here. Can't even, it's just hard. Once you see this stuff, you just can't miss it, but Anyways, that's a little off topic. But that is why some breaker structures are validated and some aren't. What happens after we swept liquidity and we broke structure to the upside? We had a run on buy side. A very nice run, actually. Anyways, that is what a breaker structure is. When you displace above a high or a low. That is the difference between a liquidity sweep and a breaker structure. A liquidity sweep displaces above a high or a low, but it does not close. It comes back. And usually, this is why I say usually after a liquidity sweep, a breaker structure happens. Okay? So let me just make this very clear. Let me make this super easy. Okay, let's say this. This is the live market, open 6:30, blah, blah, blah. We create a high, and the market starts to sell off a little bit. Okay. Market pulls back. Let's say there's a fair value gap right here that it respects. We bounce off of it. We head up here. We sweep out this morning buy side, okay? Now, what I want to see for shorts is for us to displace below this low, okay? This low that was put in, I want to see price come below that with volume, displacement, speed, and time, guys. That is the key. We have swept. Let me just make this simple. We have swept buy side, okay? Now, I don't touch this. I don't care that we just swept buy side because guess what? We can continue to run higher. It doesn't matter we just swept buy side because how do I know if this is a break of structure or if this is a liquidity sweep? Here's how I know. If price continues to run up, we close above this high, that is a break of structure. If price breaks above this high and displaces back, that is a liquidity sweep. And what I'm waiting for to take shorts, if I'm looking to flip my bias, we took out our morning target, our morning buy side target. Now I'm looking for price to displace below this low, close below it, close below this low, and continue to head down. This is your market structure shift. This is your breaker structure. Okay, we have now closed, we have displaced below this low after sweeping up buy side, which means the market is telling you, it is literally telling you, it is ready to head lower. That is what I'm saying when you don't have to predict the market, you just react. The market will tell you when it's ready to go. Okay? Very simple stuff. Very, 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 very simple. The market tells you when it's ready to go. We swept buy side, we broke structure to the downside. Honestly, guys, a lot of people's strategy is literally just that. A lot of people, this is what they trade. They wait for a sweep of liquidity and a break of structure, and they enter. I don't really recommend it. I like to get a little bit higher risk to rewards, but this could be a trade. You know, something like this. You put your stop at this high, and you take your trade. I'm so stupid. You place your stop at this high, and you follow through. Okay? Very simple stuff. That's the difference between a breaker structure and liquidity sweep. A breaker structure, you close above or below that high or low. Or a liquidity sweep is when you don't close above it. If you close above it, that's a breaker structure. How do you know if it's valid or not? Just like this. There was no sell side taken out, so this breaker structure is not valid. There is no entry to be taken here. You should not be taking an entry here because no target has been hit. No sell side, no form of manipulation has happened for this to move higher. Look at this run up. We run up, right? We have this move up. There is no reason for us to continue higher. Why? Because we have no manipulation move to head higher. There's no reason for us to head higher at all. Okay? Once we sweep out this, then we get our breaker structure, and then we're ready to head higher. Like I said, guys, the market will tell you when it's ready to go. Your job is not to predict, it's just to react. Okay? That is why you have your daily biases. This is why you back test all this stuff. This is very, very simple. Like I said, a lot of people's strategy is literally just this. Liquidity sweep and break structure and enter. It's very simple. Your strategy does not matter, guys. It's all about your risk management. You can use this model with a 50% win rate, and if your risk management is good, you're profitable. you're a profitable trader with just 2 simple steps. Sweep a liquidity, break a structure. This is not the model I use, but there's many people that do, and they're very successful with it. I like to go a little bit more in depth and get a little bit better risk to reward trades, which is why I add in fair value gaps, I add in SMT, all this stuff. But this is still good. This model works, okay? There's nothing wrong with just using liquidity sweep, break structure. It works, okay? Good risk management, any strategy works. So I hope you guys got some value from this video. This is pretty straightforward stuff. Trust me, it's not as complicated as you might think. Just go and back test this, go into the charts, look for these highs, draw out the highs, right? Draw out these highs, draw out highs, draw out lows, see what happens when price touches them. What happens? Look, get experience in the charts. Go on a chart, map out the highs and lows. Go take your tool. Here's a high. Boom. Here's a low. Boom. Here's a high. What happens when price touches it? Do you notice anything? Start to look for these things and start to see it. You'll see, okay, this was a breaker structure because, we swept this, we closed above this high, and now we're heading higher. Great. We swept this, and now we're moving down. Great. Identify liquidity sweeps, identify breaker structures. This is your model. This can also be flipped. This can be a version of sell side. This can be a version of buy side. It's just the opposite. Okay? Very simple stuff. This is, anyone can teach it. Anyone can learn this. Super simple. Super, super simple. Again, I want to reinforce, just for the beginners, if you already understand this, then the video's already over for you, okay? Because I'm just going to repeat something that I've already said. If you already understand this, then you can skip the end part of this video because this is it. Again, why did this breaker structure not work? We got a candle close above, but why did it not work? Because there was no manipulation move to take out any form of sell side yet. Okay, up until this point, we had no manipulation move lower. Which means any breaker structure without a manipulation move is not valid. It is a lower probability. Okay, I'll take that back. It doesn't mean that it's not valid. It might still work, but it is now a lower probability trade. And when you're a trader, you want to take the highest possible probability trades. Which trade has the highest chance of working out? Okay, and I'm looking at the time. This video is already getting longer than I wanted it to be, but it's very simple stuff. I wanted to make this video short, but I kind of got off on a tangent. But anyways, that'll be it for this video. Super simple stuff. I probably won't even make a part 2 on this because it's really basic. Screenshot this, learn this. Like I said, go in the charts, map out highs and lows. What happens when price touches them? Does price displace through it? Does price sweep it? What happens after that? What happens after a liquidity sweep? Find highs and lows. Go from any time frame. Any time frame, there's breaker structures. Let me delete all this. Any time frame, there's breaker structures. How else do people find their bias? On the 1 hour, breaker structure. Look, this is a breaker structure right here. We broke structure to the upside. What happened? We ran up. Okay? This is what I'm telling you guys. Watch what price does. There's breaker structures and liquidity sweeps on every single time frame. Go out, do some back testing on your own. This is TradingView for all you people that don't know. Download TradingView. Go get some chart work in. Do some back testing. Watch my videos. Learn about it. Try it yourself. Find out examples. Market's closed. You have all the time in the world to go back. Look for breaker structures. Look for liquidity sweeps. Look for all that stuff. Just back test, back test, back test. Try it out. Look for it yourself. You'll find it very, very easy. It's not as complicated as it sounds. And with that, I want to end off this video here. I wanted to make it short, but it is what it is. I'll see you in the next one, boys.